Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come. Yeah, Tuesday. What up, everybody? It's the Ides of January the 15th. Hope everybody's having an absolutely amazing day. Welcome, everyone, to the Daily Market Commentary. I'm your host, Chuck Fulkerson. We are going to do what we do each and every day here on the DMC. We're going to take a look at potential reversal trades and breakout trades from an educational perspective. If you've got any comments, leave them in the comment section down below. If you're new to the channel, click that subscribe button. So, yesterday's Daily Market Commentary, actually, we only posted on the TradersArmy.com site. So if you missed yesterday's, go to TradersArmy.com. Under the free subscription area, you can find yesterday's session. But yesterday was a good one, an interesting one to talk about, because we did have some pretty interesting moves off of yesterday's session. So really quickly, starting here with the S&P. Now, the line that I just removed, I will explain here in just a moment. Starting yesterday on the S&P, we had this gap fill area, and price came up into this gap fill area and then blew through it and then sold off the 2600 level in the overnight sessions. Matter of fact, we set up, in my mind, for a more bearish day, but we're basically just range bound, right? We are very range bound in what we do. Now, yesterday we did get a little bit of movement off of this area right here. Now, this area is a little bit of basing above this more obvious level, and we hit there and got a nice little 2-to-1. That was a little bit more prevalent in the Nasdaq level. If you look at this on a very small time frame, it hit here. We got a nice little move out of it. But in the trade feed, we had updated, okay, time to take your profits, because it was not really, reacting very well. So now what do we have going in today? Well, notice in the S&P that when I look at this gap, we came up above the gap and pierced through it. When I look at the Nasdaq, that same gap, we did not trade up to the top of that gap. Matter of fact, we didn't even close the gap, thus giving us relative weakness in the Nasdaq versus the S&P. And so what we're seeing this morning is, on this 15-minute time period, a little bit more weakness kind of building in. So I'm going to wrap my lines around this area up here. I look at the 2 a.m. reversal very regularly as a time of day where I see the markets tend to be a bit weaker. And so I'll be interested to see if we come back up into this region later today and we get a little bit of a reversal off of this zone. Now, the fact that we've almost come to it once means that I'm going to make this a dashed line trade, which is a slightly lower probability, but I do still want to have this in play. See if we get a reversal into that level at some point today. But when I look at all of these markets, right, on whether it's a 1 hour or a 4 hour, there's no question that I am in a sideways price action, right? I'm in a sideways chopping market price action, which make things a bit more difficult. Now, for those of you that are options traders, that means that there's definitely going to be some non-directional opportunities out there. However, whenever, the market tends to do this, whenever we start to see this kind of pinching, there sometimes can become very violent moves out of it. And the violent moves that come out of this market is something for us to be a little bit more concerned with. So just keep your risk, in an area that you're comfortable with. Keep your wits about you, as they say. But that's really where I see a decent reversal today. Now, we could break down below an area here, and I think there's room to fall inside of this market all the way down to here. Crude oil yesterday. So for our crude oil level, let me know if you caught yesterday's short in crude. And the level that we looked at in crude, I'm going to spend a few minutes and explain this level, because this is an important little lesson to talk about. And we talked about it in our live trading room. And the thing that I wanted to highlight here is these wicks are important. Think about these wicks for a minute. These wicks tell me that price came all the way down to here, rallied back up, got all the way up to here, came back down, and then we had this indecision candle before our strong move. Now, this move down that followed, there was some buying pressure in here that kept trying to drive it up, but we opened on the high, closed near the low. Opened on the high, closed just off the low. So opening on the high after we have this area where there was some selling pressure in those upper wicks tells me that there's definitely some opportunity here to get short. Now, as price rallied back up into that level, you get a little squirrely coming into it, because we traded all the way to the top, but then we got a really nice move out of that level. And price came down, all the way as low as 50.39. Now, from what we've done this morning, we're really just kind of range bound. So this area, since we traded all the way to the top, I can't use it again. I need to remove that level. But looking at at really that 2 a.m. reversal, we've got kind of just chopped right through it. And so there's not a definitive location for me on here. So this to me is one of those days where it might make sense to kind of hang back. Now, for those of you that are longer term, you guys listen pretty regularly. We have an iron condor sitting out there that expires on Friday, the 55 by 40, which we set up in mid-December, and it looks like, knock on wood, unless we get a humongous up day or a humongous down day, that one looks like it's still fairly safe. Next, gold. So in gold, we are once again trading sideways. I think you're starting to see a little bit of a pattern here, right? So in gold, we identified this little wick over wick area of demand, this fair price value area in here, which is a little bit cleaner to see on the 15-minute chart. So on the 15-minute chart, it's a little bit easier to see that area with this strong rally up. Now, this is a confirmation style entry because we've come so close to it a number of times and not been able to get our order filled. Matter of fact, we had this long tail down into it in the overnight session right there. Notice again that European market open, always playing an important part for reversals. Came down to the bottom, almost touched the level, and then prices rallied off. Now, since it's a dashed line, we're not activating this trade till we come halfway into it anyway. And once again, I'm in a position where I don't want to force a trade. So looking at all four of these markets today, right? Looking at all four of these markets on a 1 hour time period. If I have all four of them up, it's not hard to see that we are in a strong consolidation period. This is a great time of the year. When you see these markets that are in this tight of a consolidation period, it's a really good opportunity to practice knitting, or maybe to do yoga, or here's an idea: learn how to make your own ice cream, but don't force a trade. Whatever you do, right? Think of some other things to do out there. There's no reason to force a trade. And by the way, this is why options trading can become very useful, because there are certainly some non-directional plays out there, but I don't want to force a trade. So I hate to sound non-committal here, but I'm not going to force something if it doesn't give me a good, obvious, big picture direction. And right now we're getting that sideways price action. So what could that be setting up? Well, what's funny is if you look on Twitter, or you follow the social media sites, and I know Twitter's full of people that are posting charts and their opinions, and opinions are like armpits. Everybody has one. They all stink, and some of them are a bit hairy. Some people, I see all over the place how the markets are more bearish, and then I hear somewhere else, we're putting in a good base. This is more bullish. I think I saw a story yesterday that E-Trade said that the market is that individual investors are more bearish than they've ever been. That is typically a bullish sign, actually. If the individual investors are more bearish than they've ever been, could this be a consolidation accumulation point? Yeah. And so what I'm going to do is probably next week, I'm going to do a YouTube live session on maybe some longer term options trades that everybody can kind of take a look at and see what your thoughts are on it. So just something to consider, as we're looking at, okay, what's the next step, right? Where do we go from here? And right now with that sideways price action, I'm not going to force anything. Now, if I'm getting that sideways price action, I'm going to, look and see what are the other markets doing as well. So in bonds, our 10-year note, we have a little bit of resistance up above us. We've not been able to penetrate through that level quite yet. And we've got some demand down below us. And so both of these areas are in play. Remembering, for those of you that are new, the blue lines represent breakout trades. The dashed lines represent confirmation style entries. And the solid lines represent limit style entries. I've had a couple of questions about the lines that I draw. For more detail on the lines that I draw, go to tradersarmy.com. underneath my trading courses, there's an area that says free trading videos. And there's an entire video on how to draw the lines and what each of the lines mean. So go watch that. It's 10 minutes, but it'll help you to understand exactly what the lines are and what we're looking for in those individual lines. Okay, so that's the bond market. Not a whole lot happening in between some areas. In the Aussie, so in the Aussie, we've got a little bit of a potential breakdown below this area here. I do like this little setup that we have right here. This could set up for a decent reversal. Now, once again, we fell right at the European market open. Those typically, can turn into pretty good areas of opportunity. This would be a potential reversal up ahead in that in the Aussie. Right as we have, oops, I went to a 4 hour. I meant to go to a 15-minute. Looking at it on a 15-minute time period, it's this area right here. You've got a fairly nice move away. So if we do get a retest back up into here, this one may be worth looking into. I actually like this one a bit better. Now that I look at it on the 15-minute, I like this area up here a bit better. And the reason I like this area up here a bit better is because this area here might be a little too obvious. All right. And oftentimes if I've got those areas that are a little too obvious and I look into those areas that are formed and created by wicks, those wicks do mean a lot. So I'm actually going to switch to this area up above, as this area up above looks like it's got a slightly better opportunity for a reversal up here. Now, we may not get to that level because we may break down. And if we break down, there is a breakdown level down below us. Now, remembering my rules on a breakout, I need some basing before the level, and we are getting a little bit of basing. We got a little bit here, a little bit right there. I'd love to get some more basing before the level, and then I think there's clear room for price to make it down to here. Next, in the euro. So in our euro trade, we got our breakdown in the euro position. So leave me a comment down below if you took the euro breakdown. The euro breakdown is moving very nicely off of yesterday's daily market commentary level, where we had those lower swing highs and then some basing. And so we do have our euro breakdown. That one is still making a pretty nice move. So let me know in the comment section below if you grabbed the euro short. And then the Canadian dollar. Canadian dollar, we're basing in front of what was a level. Now, this was a level that I had actually as a potential trade, as a potential long. I had this level in place for a couple of days. This level was one that I was highly considering for a potential reversal. I liked the time of the day. It was right around market open, and we were coming into it with some decent move, and then we went, and then we came down close and went, and now we're still going, in front of the level. And so, what it does is it loses its luster, right? I'm not interested in that. When I go to the 4 hour chart, it's still, my 4 hour still tells me that I'm better off being a buyer. Technically, however, my momentum has weakened so much that I think that there's a chance we'll get a pullback into maybe this area down here, or at the very least this 75 115 area. Last, certainly not least, with our Great British Pound and Japanese Yen, we are seeing another very similar price action and price pattern. So in our Japanese yen, we had this area here for potential breakdown with very limited room to run, but we didn't get to it. And now we've kind of continued that sideways price action. Once again, go learn how to bake cookies. Go figure out how to do origami, but don't force a trade, whatever it is you need to do in lieu of there. Great British Pound, we've got this level way up here. There's a potential reversal up in here. And now that level was found off the 4 hour chart. It's the origin of this very strong move down. And those big speed candles tend to eventually get erased. And that's exactly kind of what we're seeing happen here. We're getting back to the top of there. Let's see if we get a reversal up at that level. So I know it's a little bit more risky, but if it's too risky, then slide over and change a different asset. One I want to point out here is Nat Gas. So Nat Gas, we had a gap up, strong gap up. Before then, there was a little bit of a fading of the gap, and I had said on the on our Sunday night session that fading the gap is a bit more risky. It's always going to be a bit more risky, especially when we don't gap up into clear supply. And we did fade for a little bit, but then we got a very strong reversal. Now it came up into a level that we've had established for weeks. And we got a little bit of a sell-off off of this level. So if you got into this short on the Nat Gas, it's time to take your stop and move it down to above 3629. Move it down to above 3629 because now, that gets you a little bit of profit. If you took multiple contracts, it's a good opportunity to take one off the table and allow additional contracts to continue to run. I will say this. Nat Gas has had a fairly recent increase in the margin requirement, and it's also started gapping over the weekends in an almost unpredictable fashion. Well, in a very unpredictable fashion, frankly. And so it's fallen off of most of my tradable asset lists. But for a lot of you out there that are still using it, I'm still identifying some of these levels. That level we've been waiting on for a while, and it finally hit and met entry. So leave me a comment down below if you're able to catch any of those trades that we have identified. But tip of the day: don't force the trade. Don't force the trade. All right, everybody. Hope you're having an awesome trading day, and I will see you tomorrow.